Money FM 89.3. Best of breakfast. The Bigger Picture, only on Money FM 89.3.
Welcome to The Bigger Picture. I'm Danko. Now, after more than 6 hours in London's 19th century mansion, representatives for both the US and China concluded their first day of negotiations in the British capital. And this comes on the backdrop of rising tensions in the aftermath of the country's trade truce that was reached in mid-May in Geneva. So, what were the key highlights coming out of the recent China and US trade talks in London? Meanwhile, with the release of the US non-farm payroll data from May coming in higher than expectations, what does this suggest about the possible trajectory of the interest rate path? And what stocks are piquing investors' interests today? Let's find out with Sean Teo, the sales trader at SAXO. Good morning, Sean. How are you doing today?
Good morning, Dan. I'm doing good. Hope you've had a good start to the week.
Yes, certainly so. I mean, we've got lots to break down today, especially in terms of the China and US discussions that just happened overnight. So the US delegation was led by Treasury Secretary Scott Bessent, while the Chinese delegation was led by Vice Premier He Lifeng. And while Premier He left without commenting to the media, Bessent told reporters in London that they had a good meeting, and Commerce Secretary Howard Lutnick called the discussions fruitful. So walk us through the key takeaways from the meeting in London, and what are you reading from it so far?
Okay, I think overall the sentiment between the US and China seems to be on the positive side. I think both sides have actually expressed positive comments without really revealing too much. So as the talks are actually still ongoing, I think as long as we don't see anything negative coming up from either China or US, that's generally a good sign.
Right.
So not to forget that the talks will actually still be continuing. For Singapore time, it will be this afternoon, so London morning at 10 a.m. So we would still need to see what negotiation or progress would be coming out from the US and the China. But more importantly, I think the semiconductor part, trades between exports of from US to China and the rare earth minerals, I think these two will be the key ones that investors will generally be looking out for.
Certainly so. Thanks a lot for that, Sean. Now, let's talk about how global markets are digesting news of this development so far then. I mean, what are you seeing in terms of how, Chinese stocks and US stocks are performing as of now?
I think both Chinese and US stocks have been performing relatively well. The US stock market, at least for the S&P 500, overall sentiment seems rather positive. We are actually not that far off from the all-time highs. Now we are actually roughly about 3% below the all-time highs. Right. Chinese stocks, on the other hand, also have been performing relatively well. Performance-wise, this year for Chinese stocks, I believe Chinese stocks are actually slightly outperforming the US in this aspect.
Yes, and then that's what we will be diving a little bit deeper into in terms of the US market performance in just a bit. But let's now turn our attention over to the US non-farm payrolls data, which was released just last Friday by the US Bureau of Labor Statistics and showed that despite consumers and businesses preparing for tariffs as well as a potentially slowing economy, the slowdown in the non-farm payroll growth was not as severe as expected. So what does this suggest about the health of the U.S. economy, and to what extent do you see this influencing the U.S. Fed's interest rate decision?
So, as you mentioned then, the non-farm payrolls, the economy was actually still adding jobs at a relatively healthy pace. Figures were higher than expected, so this is pretty good. But however, this better than expected labor economy means that the Fed actually still might hold off cutting rates that quickly. Yeah. Because if your labor economy is strong, there's no reason for you to cut rates as quickly. And more so due to the current uncertainty of tariffs, which could actually potentially increase inflation if the Fed actually cut the rates too quickly. However, I would say the overall sentiment and economy still seems pretty robust. Not to forget, we just had the US consumer inflation expectations last night. So the expectations actually dropped slightly, so it was actually lower at 3.2% compared to May, which was at 3.6%. And not to forget, the most important one for this week would actually be for tomorrow. Tomorrow we will be having the US inflation data, so this would be a key figure for the Fed to watch to see how inflation is reacting in the US economy.
Yeah, it does reinforce the fact that, the US might adopt a wait-and-see attitude. So I guess it also does provide some hope that, stability is at least supporting the economy in some ways. Now let's dive a little bit deeper into the US market's performance, where we're seeing, the major indexes closing into their all-time highs. Just as of last night, the S&P 500 is, like what you've rightly mentioned, close to reaching a fresh all-time high, just about 2 to 3% away from it. And that wave of optimism comes on the backdrop of Friday's positive May jobs report as well. So how should we be thinking about the current S&P 500's valuation, and will we be seeing an all-time high breaking soon?
I think that's going to be a little bit tricky to say because, as you know, Trump can be rather unpredictable for the markets.
Yeah.
Anything or any comments that he says can really roil the markets either direction. But I think as of now, the most important one would be the negotiations between US and China.
Right.
Generally, if we do see a positive developments between the negotiations, then I think that could be generally a good sign. Yes.
All right, fantastic. And yes, we will be keeping a close eye on that and to see how this develops over time. Now, let's zoom in a little bit deeper into parts of the market that are making huge moves and turn our attention over to Tesla, a stock that's suffering from Elon Musk's bitter falling out with President Donald Trump. I mean, it's seen how its stock has shaved off about $150 billion in market value within a single day. And just recently, Tesla was hit with a pair of downgrades on Monday as well, underscoring mounting concerns about, the electric vehicle maker's outlook. So it last traded at about $308.58. That's up 4% overnight. Some say that this could be a buying opportunity for investors. What do you say?
Okay, so regarding Tesla, I think the road ahead for Tesla could be rather challenging. But on the bright side, I think since now Elon Musk has actually done his job at the Dodge office, the Department of Government Efficiency. So now he's actually reallocating all his time back to Tesla and the rest of his companies. This hopefully actually would paint a brighter picture for his companies ahead, and that includes Tesla, because he would now be spending most of his time, reinvesting his time into the company. Not to also forget that actually previously there was some tensions between Musk and Trump, but however, I think overnight this tension has actually lightened up a little.
Yep.
But I think we would not see such a close relationship as we've seen before, like during the presidential election. So tax credits wise, it's actually also being cut from the US budget deficit. So this would also actually provide some hurdles for Tesla. But we'll see how Elon Musk actually tackles these hurdles.
Yeah, I think a lot of investors out there now are just hoping that Elon just doesn't run his mouth, at least on social media as well. That's likely to push the stock price up or down. Now, let's shift our attention over to Apple's flagship event. Just kicked off their widely anticipated Worldwide Developers Conference yesterday, and based on first impressions, markets aren't exactly impressed. In fact, Apple's stock has fallen more than 1% overnight. So what do we know about the announcements that they've made so far, and is there an investment case for this stock here?
Okay, so I think many investors and even consumers of the Apple products were expecting a lot more from Apple, but unfortunately, this event was rather disappointing as a lot of expectations were not met. Mainly, actually, one, I think it was a belief regarding AI. Apple has actually lagged behind quite a bit relative to its peers like Microsoft and Google. So Microsoft has Copilot and Google has Gemini, which are actually pretty impressive. But Apple's Siri AI, what they have mentioned so far is that it required more work and development, and they would only actually be revealing a little bit more about this in the next year. So I think Apple has yet to actually fully catch up, or at least get onto this AI bandwagon, when a lot of companies are already integrating AI into their platforms, into their businesses, and into almost everything you and I even use in our day-to-day basis. And Apple has yet to really catch up in this aspect.
Yeah, there's certainly some concerning news there. We definitely have to keep an eye out on how this develops, as, they've got 2 more days at the WWDC conference that's happening today and tomorrow as well. But on the topic of AI and on the earnings front, we've got 2 big tech companies that are reporting their earnings this week. I'm talking about Oracle and Adobe, which could double as a gut check for the AI trade. So can you talk to us about what makes these 2 stocks so influential on the AI trade, and what key metrics we should be keeping an eye out on?
Okay, yes, we will be having the two relatively big earnings for this week, which you mentioned. It's Oracle and Adobe. So I think investors would generally be seeing like how both of these companies further integrate this strong AI trend and demand into their platforms, and how both these companies' earnings, how the earnings come out would actually be, I'll say, somewhat an indication of how businesses are also spending on tech and AI, and how these businesses actually spend the money would also actually give us an indication of the overall broader market and how everybody is actually integrating AI into their daily life or even work. So regarding the earnings, Adobe actually has beaten in the last couple of earnings, but they have always provided relatively weak forward guidance. So the stock has not actually taken it as well. Oracle, however, actually also pretty much, I'll say, similar. They also actually missed a couple of their earnings. So investors are actually generally more cautious in this round. But I think one thing to see is that if they are actually still beating their earnings estimate, but they still provide relatively weak forward guidance, it also shows that somewhat businesses and consumers are actually embracing this new technology and AI into their daily lives.
All right. Thank you for this comprehensive breakdown of what we should be keeping an eye out on for the rest of this week. It has been a fruitful conversation. Thanks for joining us this morning, Sean.
Thank you so much for your time, Dan. Have a great day ahead.
You too, Sean. And we've been in conversation with Sean Teo, the sales trader at SAXO Singapore. Continue to keep it right here with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.